Hi everyone, welcome back to Sahad Academy. Today in this video we are going to understand the difference between financial accounting and management accounting, and we're going to see why do we need management accounting if we are already preparing financial accounts and doing financial accounting. Alright, so let's begin this video and let's understand the difference between these two. Now see here, it's really simple and straightforward. Normally when we talk about accounting, people usually think we are talking about financial accounting because it's the most popular one. But you have to understand, accounting is a broad thing, okay? It is a big tree which has so many branches. There is financial accounting, management accounting, cost accounting, and then there is human resource accounting, tax accounting, forensic accounting. So there are different types of accounting which you have to understand. Now here we are trying to understand the difference between financial accounting and management accounting. So see, financial accounting is nothing but a process of recording, classifying and summarizing the entities, the business, financial transaction and events, and report them in the financial statements. Okay, we have to communicate the financial data of the company to the users of financial statements, right? So how are we going to communicate? For that we need a meaningful format, and that meaningful format is called as financial statements. Statement of profit and loss, which will show the financial performance of the company, how much profit or loss has happened in the company, and then the balance sheet, which shows the financial position of the company, how much asset the company has, the liability, the equity, right? And then the cash flow statement, which shows the liquidity of the company, how much cash does the company has, what all cash transaction has happened, right? And then there is statement of changes in equity, which shows the changes that have happened in the year regarding the equity. And then there is notes to financial statements, which explain the financial statements in detail. Is it clear? So these are the financial statement that we have. We prepare them. Why? Because we have to provide information to the shareholders, investors, lenders, creditors, tax authorities, customers and employees, right? So this is the thing. This is the purpose of preparing the financial accounts and then communicating the information via financial statements. Is it clear? Simple and straightforward. This is what financial accounting is. Now, what is management accounting? In management accounting, what happens is, see, we are, let's just say, management accountants. What do? We gather information first from different branches of accounting, from financial accounting, from cost accounting, right? We gather the data and we use that data and analyze it by using the techniques of management accounting, techniques or tools of management accounting, like cash flow analysis, fund flow analysis, trend analysis, ratio analysis, and then different techniques we have: standard costing, marginal costing, CVP analysis, budgeting, right, forecasting. All these things we use, we analyze the data and we come to a conclusion, right? We are management accountants. That's what we are doing right now. So we have come to a conclusion, and then with that conclusion we prepare a report, okay? And this report is a confidential report that is only meant for the managers of the company. We are not sending this report out to lenders, creditors and tax authorities and all. No. This report is confidential. Okay, it is for internal use only. These reports we hand it over to the managers of the company, of that particular department, yeah, or maybe the manager is of that particular segment or project manager, right? We give the report to them. Then on the basis of that report, the manager will take decisions, business decision. He will make policies, plans and strategies, right, for running the business effectively. See here, the accounting system which provides relevant information to the managers to make policies, plans and strategies for running the business effectively is known as management accounting. Is that clear? So what's the purpose over here? Just to assist the management in making the decisions. All right. Okay. Next, what's the difference? See here, the focus. Yes, understand. In financial accounting, what do we have? In financial accounting, everything is of past. Whatever that has happened in the past, we have recorded that in financial accounts, and then that is reported in the financial statements, right? How much profit we have earned, how much assets do we have, isn't it? How many liabilities do we have? So, the historic picture is presented in the financial statements, isn't it? So it's a backward looking approach. What has happened? Is it clear? Financial account present historic picture of past operations, whereas the management accounting is different. It looks at the past, and then here some prediction is done, some forecasting is done, isn't it? Yes, see here, management accounts are both a historical record and a future planning tool. Is that clear? What will happen? For example, let's just say we are launching a new product. So how much sales that can happen because of this? Yeah. So that can be forecasted over here by using the tools of management accounting. We'll do budgeting over here, forecasting over here. So management accounting is what? Forward looking. The approach is forward looking. Is that clear? Yes. Next point is, see here, legal requirement. Yes, understand, you have to prepare financial accounts. Okay, if you are a company, if you're a corporate, if you're a big size company, you must prepare the financial statements by law. You have to publish it. Yeah, you have a responsibility. Even if you're a small business, still you will prepare the financial accounts, because you have to pay the tax. So for tax authority, you have to show them, right, how much profit you have made, how much loss you have incurred, isn't it? Yes. So there is a legal requirement over here, whereas management accounting is a luxury. Because why do you need management accounting? To take effective and efficient decisions. So it's not necessary that you have to do it. Is it clear? So there is no legal requirement over here. It is your own choice. It's management choice. Do they want a management accountant? Do they want a separate department which will focus on just management accounting? Is it clear? So that's the thing. So there is no legal requirement over here. And then understand financial accounting. Here the financial statements have to be prepared according to the rules, the GAAP, generally accepted accounting principles. In India we have AS, right? So that's what it is. Yeah, Indian GAAP that we have are strictly followed when we prepare the financial statements, when we prepare the financial accounts. Or we also have Indian accounting standards, which are the IFRS we have taken and we have converged them into Indian accounting standard, right? So internationally what they have? Internationally they have IFRS. In US they have US GAAP. Is that clear? That's how it is. So rules are strictly followed while preparing the financial accounts. But here rules are not followed. There are no strict rules. There are no accounting standards, something like that. Okay. So here, management will decide how the report format and everything will be there. Okay. No strict rules govern how management accounts are prepared. But understand, some tools and techniques are used of management accounting. So how you use those tools and techniques, for that there are rules. Is that clear? Yes, understood. Then what else? Then see the format. Yes, in India the format of the financial statement is specific. It is fixed as per the Companies Act, if you're talking about companies, right? So there is a specific format that we have to follow, isn't it? Yes. But in management accounting there is no specific format. Whatever the management needs, how the management needs, on that basis the format will be there. Is that clear? Okay. Then the time span. Understand, financial statements are prepared for a fixed period. For example, 1 year, yeah, or maybe quarterly you can prepare. Is that clear? But here it's not like that. Here there is no fixed time when you have to prepare the, management accounting reports. No, here whenever the need arises, whenever the management have to take a decision, at that time you have to analyze the data, you have to prepare a report and give it to the management so that they can take the decision regarding that thing. For example, let's just say the company is in need of a particular asset. Okay, so company can lease that asset, get it on lease basis, rental basis, or maybe company can buy the asset completely. So this is called as lease versus buy decision. So this is an important decision of the management. So now if you are a management accountant, then what you have to do? You have to analyze. You have to take the data and you have to analyze the cost versus benefit analysis you have to do, and you have to tell the management which option is better. Okay, you have to present the information. Is it clear? So on that basis, the management will take the decision. Another example, let's just say for example, we are launching a new product. So now we have to decide on the pricing strategy. Okay, let's just say for example, there are two pricing strategy right now that we are thinking about, skimming and penetration pricing. So which will be better right now in the current market condition? Yeah, which strategy will be better in that particular segment? You have to decide that. So you will do the analysis and you will prepare the report and you will give it to the manager, right? Then they will take the decision which strategy will be the better. Is it clear? So that's how it is. Whenever the need arises, you have to prepare the management report. And then see here the details. In financial accounting, the financial statements provide the whole organization's information, right? How much profit entirely, how much the business has made, right? How many assets entirely the business has, isn't it? It provides the information of whole organization. Whereas in management accounting, it's not like that. We don't look at the overall view. Here we are specific and we look at specific things. It provides information of particular product. As I told you, we are launching a new product, which pricing strategy. So we are particularly talking about that new product which we are launching, and the report that we prepare, that is also meant for that manager only, not for the entire management and all. Is it clear? So it provides information of particular product, segment, department, project. Is it clear? Simple. And then see verifiability. Now understand, whatever data that we take in the financial statement, it's historical, whatever that has happened. So that information presented in financial statements is verifiable. We can verify that it has happened. Okay, but here it's not like that. Understand, in management accounting, I told you, we have a forward looking approach. We estimate things. Yeah, we do prediction, we do forecasting. So because of that, whatever that is going to happen in the future, how can we verify that? We can't verify that. So that is why here always there can't be verifiability. The information presented in report is predictive in nature, hence it is not immediately verifiable. After 2-3 months, you will come to know how much sales we have made. Yeah, right now you can't verify. Yeah, you can't say 100% that you will have this much sales after 2 months. It's not verifiable. Is it clear? Because you have a forward looking approach over here. And then see the last point, publishing and auditing. Yes, in financial accounting, when you prepare the financial statements, it has to be published if you're talking about corporates, and it needs to be audited. It's compulsory that the financial statement must be audited by its statutory auditors. Is it clear? But there is no such thing in the case of management accounting. Here you will not audit and all, because it is meant for internal use only. You have prepared a report that is just meant for a small manager of that particular product, of that particular segment. It is not meant for the whole organization or outsiders and all. It's for internal use only. It is not meant to be published or audited. It's confidential. Is it clear? So these were the 9 differences that we have discussed regarding financial accounting and management accounting. It was really simple and straightforward, right? Financial accounting is historic in nature. Management accounting is forward looking in nature. What do we do in management accounting? We gather the information, we analyze the information with the help of the techniques and tools of management accounting, and then we come to a conclusion, prepare a report, give that report to the managers, and they will take the decisions based on that. Okay, that's what it is. Really simple and straightforward. Yeah, here you have internal and outside users, yeah, of financial accounting or financial statements, but here it's not like that. It's only for internal use, just for the managers, right? So yeah, that's all for this video. See you in the next video. Bye.